Good question to ask yourself when you're looking at charts and what you have on them is, what exactly do I use that for? Why do I have that on my chart? So to answer this, I'm going to explain what's on the charts behind me, why I have it. Because if you can't answer precisely why you have certain things on charts, you don't need them. Get rid of them. So what have I got? I've got 60-minute charts. 60-minute charts give you a general scope of what's been going on recently. They give you a vision of not just what happened yesterday or what's happened in the last 5-10 minutes, but the sequence of events that have led you to where you are. This is where really most of my ideas will come from in terms of the direction that a market can go and the scope of the move. How far can a market realistically go today? So that's what I've got a 60-minute chart for. The other thing that I have for context is a market profile. What profiles do for you is show you where value is. This gives you an extra layer of understanding as to how the market has got to where it's got to and where it can go. Give a real simple example. You may well look at your 60-minute chart and think, wow, strong rally, this market looks really, really strong, expect the following day to continue. You take a look at the profile though, and this tells a different story. Because without shifting value in that move, the profile is saying to you, this isn't a move that has actually got any legs to it. It's a weak move and one that could roll over. So this helps you understand in depth the move rather than just simply looking at where the price has gone. So they're my two main filters as to understanding where a market can go and where the sort of changes are going to come from. That helps define where all the trades are going to happen. Then I'll have a shorter time frame chart. This will be a 5-minute or a 1-minute dependent upon the volatility of the market. A more volatile market, I'm going to bring a 1-minute chart in. A less volatile market, I'm going to bring a 5-minute chart in. And this is to help define precisely where you're going to get into the trade. You've already decided the trade from your hourly and your profile. But then I'm going to bring in a 1-minute or a 5-minute to decide precisely where and exactly where I can place a stop to make this a manageable trade. So that's the time frame aspect covered. When it comes to a footprint will be brought in at very specific points. I don't want a footprint up all the time, because what a footprint does is it tells you what the price adders are telling you anyway, but takes up a lot more screen space and ultimately is slightly lagging. So the price adder tells me enough. The footprint I will use when I'm getting to a certain point to give me that extra little granularity. So what have I got on the charts? A lot of them have a moving average. Now this is a short-term moving average, and the purpose of this is for certain trend following moves. And that's the only reason. It's not being looked at all the time. It's not something that I'm going to focus on. But in certain specific situations, when a market starts to rally quickly or drop quickly, that moving average is going to be very helpful in illustrating to me the continuation or the ability of this move to keep going. I have a VWAP on some charts. The VWAP for certain markets is something that I'm going to look at on a sort of more 5-minute time frame for a slower trending move. So different to the moving average, which keeps up with a faster move, the VWAP is there where we've got a directional day but a more steady move. This is something that I particularly like in the Bund, more so than most other markets. The other things that I have on a chart, volume. I want to understand whether a market is actually trading at similar volumes to what it has been. To be able to pick up those changes, those shifts in volume that says, yes, now something is going on. It adds a little bit of extra information. I'm also using volume to help stay away from certain trades. Even though a trade may look on, if I'm looking at a market that's trading well below average volume, I know that I don't really want to be in that trade. As much as it may look good, I need the volume participation as well. If I don't see that, I don't want to be part of it. And the other indicator I have at the bottom of some charts is a delta indicator, a cumulative delta. What this tells you is the sort of desire from buyers or sellers to hold on to a move. And I'm looking for divergence between the delta and the price. That really is then to alert me to a move that perhaps doesn't have the legs that it might look like it has. It doesn't give you a trade, but it is, again, increasing that depth of understanding of what's going on. If you're seeing a market rallying and delta falling, this is not as strong as you think, because sellers are quite strong here. Sellers are acting, in which case they could turn this move over. So it tells you I don't massively want to be long. And also, if an opportunity to be short against the directional move appears, this is a viable trade. So for every indicator you have, for every chart that you have, unless you can explain precisely why you have it, what exactly the reason is, or when precisely you would look at that, you have to ask yourself why you've got it. And if you can't answer those questions, get rid of it, bring your charts back to basics and build upwards from there. Bring stuff in that you can say, I know exactly when this is going to help me out. Because if you don't, all you have is tons of information, it creates complexity and confusion, and doesn't actually lead to any consistent trades being taken on the back of it. So there you go. Simplify your charts down, make your life easy, and build out from there. If you enjoyed this, click subscribe, click on the notification button below. I'll catch you all very soon.